to this educational presentation. Now, today I'd like to talk to you about trading rules that can help you become a consistent day trader. I know everyone wants to be a day trader. They think they see all the commercials and all the people they've heard talk about it, about how easy it is to make money in just a day, but it is rather difficult if you don't know what you're doing. For example, if you look at this first chart here, here's a 5-minute chart in Tesla starting just last week, all right, just very current. Let's say we were day trading that and you were interested in purchasing Tesla. Maybe we realize it's a very expensive stock, but maybe you wanted to purchase 5 or 10 shares and you're interested in it, and all of a sudden it opens up, gaps up, and keeps going higher. Now you missed it because you said to yourself, wow, I was waiting for it to kind of give me a little bit of confirmation to get in, and it just took off right off the bat in the first hour. And on top of that, the indicators I follow are overbought. In fact, that chat room I go to says that this is tremendously overbought. So you decide you're going to wait. You're going to wait for a little sell-off. After all, it's been going down for the past half hour or so. And you say to yourself, I'll wait for it to come back and retrace about 50% or so before I get in. So that's your plan, and then this happens for the remainder of the day. It really never goes down any further than that. And then you miss it as it closes towards its high. Now, in today's presentation, I'm going to actually share with you 2 rules that make up one of our most popular as well as consistent strategies that actually would have generated signals all the way up. So you would have had many chances to get long during the day if you had missed it. And in fact, if you were well inclined to hold a position overnight, you could have actually potentially gained 250 points in just one day. Now, I know a lot of you may be saying, well, Steve, I'm not really a technician. I kind of go by my seat of my pants. I don't really have that much structure in my trading. It's a little bit difficult for me to follow all these technical rules and everything. Well, that's okay, because for that reason alone, I designed with Pro Trader Strategies the PTS Primo charting platform. This is an educational platform that actually generates automatically these consistent day trading signals. So welcome once again. My name is Steven Primo. I am the president and founder of Specialist Trading. And Specialist, if you're not familiar with what Specialist is or does, it doesn't mean you're any more special than anyone else. It just means that if you ever Google those pictures of the floor traders on the stock exchange, they used to, scream and shout and make all these weird hand signals with paper all over the floor. Well, that's what I did. I've been trading now for 43 years, and 16 of those years I was on the floor of the Pacific Stock Exchange. 9 of those years I was a specialist. So a specialist simply made markets in roughly about 50 or 60 stocks. If you wanted to buy or sell a particular equity like IBM, which is one of the stocks I made a market in, you had to walk, or the floor broker had to walk up to the specialist who specialized in making a market. So I was making markets during the crash of '87 and the bull market that followed. So I've traded straight up markets, straight down markets. I've traded sideways markets. Any strategy, any system, any technique you can think of, believe me or not, I've traded it already. It's just probably been rebranded and renamed. So in my 43 years of trading, I know what works in terms of consistency and I know what doesn't. So that's our goal at Specialist Trading, simply to teach you these things that have stood the test of time, so that for the very first time in your trading career, you can actually make your own trading decisions. That's what it's all about. And so we're really just an educational company trying to educate you, regardless if it's investing, swing trading, or day trading, as you'll see in just a few minutes. Now, before we begin, as always, we're first required by law to share this with you. So please take a moment to view our disclaimer. I'm going to show you a lot of performance results using these particular rules that I'm going to be sharing with you, but please remember that we can in no way guarantee that any of the results I'm about to share with you will be repeated in the future. And also, please remember that all examples, since we are an educational company, all examples are strictly for education purposes only. Now, if you're looking for education on a daily basis, I'd like to take this time to invite each and every one of you to follow us on Twitter. There's our handle right there. You may want to copy that down at SPCLSTTRADG. Every day I post different information, educational information on a daily basis, anywhere from signals our strategies have generated to little bits of financial wisdom. So there's lots of great free education. So please feel free to follow us on Twitter. Now, as I stated in the beginning, opening of this presentation, we are first and foremost an educational company. We're a little bit different from other companies in that we don't in any way claim to have a method or a system that works 200% of the time. We don't generate buy and sell signals for our students. We don't tell you what the perfect market is or the perfect time frame. We feel, in our opinion, that that's actually the reason why most traders fail, is because you're taking yourself out of the game. You're allowing someone or something else, some highfalutin indicator or some guy on TV telling you what to buy or what to sell on a daily basis or what he thinks of the market. And that really is a recipe for disaster. I mean, think of it. How do you make your own trading decisions? Do you go to a chat room or a trading room? Do you, look at the guys on TV and find out what they like or don't like? That's the way most traders, myself included, when I first started trading, that's the way they make their decisions. And in my opinion, that's the number one reason why 80 to 85% of all traders fail. It's because you've taken yourself out of the game and you've allowed someone to do your own trading. I mean, think of it. In any other career, in any other profession, that would be absurd, right? Think of an airline pilot asking the passengers, what do you think of my flying so far? How do you think I should land this? Okay, what's your opinion? Or a brain surgeon asking, the other nurses or the patient even, how should I operate on you? What do you think? What's the best way to do that? But for some reason, it's totally admissible during trading. It's okay to ask other people what they think. It's almost very similar to betting on horses. Who do you like in the fifth? But remember, betting does not equal trading. Trading is an art, trading is a profession, and it's something a little bit more sophisticated, and there's a lot of education that goes into it. So that's what we're here for today. So my goal as a teacher is not to trade for my students. It's not to tell them what to buy or what to sell, not to force feed them signals, but to teach them how to trade with the specialist edge. This is the same way I was taught some 43 years ago when I was struggling on the floor of the stock exchange, and what my mentors taught me, and this is what I'm teaching all of our students. We have students in over 115 countries and in every state in the United States, okay? Okay, so we're going to start today, but before we begin, once again, I think the basic format is to take questions at the end. So if you have a question, kindly wait to the end. I promise I'll get to each and every one of them, but I have a lot of slides to share with you, and I just want to make sure that you're able to see them all, okay? So if you have a question, please wait till the very end of today's class. Okay, with that stated, let's begin. And I want to start out by sharing with you what my mentors taught me and what I learned on the floor of the stock exchange. Because even though I started my career on the floor of the Pacific Stock Exchange, I struggled probably like many of you have in the past, or perhaps many of you are struggling right now. In fact, I was doing probably the same things many of you are doing right now. I was waited with bated breath for any news announcements, anywhere from jobless claims to money supply to earnings reports coming out. In fact, I was in charge of making markets in roughly about 60 stocks. So after all, I had to know what the earnings estimates were for each and every one of those stocks, right? So I kept track of all that. On top of that, if you looked at my screens, I had roughly about 50 or 60 indicators plotted on my screen. It was unbelievable how I could even trade anything. I had to wait for everything to line up. So it was unbelievable how many things I was tracking. And at the same time, I was listening to all the so-called trading gurus, the guys on TV telling you what they thought of the market and what was supposed to happen. These were all the things I had been taught that was supposed to work, right? But unfortunately, it didn't work. In fact, my first year as a trader on the floor, I didn't think I was going to make it because I couldn't make any money and I was really struggling. I was lucky enough to have some mentors on the floor. These were specialists themselves who have been trading about 40 years each, who took me aside and said, Steve, if you want to be a consistent trader, here's the first thing you must learn. And this is what I share with my students. What they said to me was, it is the easiest thing in the world to overcomplicate your trading, but it's the most difficult thing in the world to simplify your trading. Now think of it. Anyone in the world, regardless if you've been trading 30 years or 30 minutes, can add on more and more things to their trading plan. It really doesn't take a lot of character to do that, right? You can have tons and tons of more information, but it takes a lot of character and a lot of discipline to discard those things. And why would you want to discard them? Well, because my mentors taught me they really don't hold much consistency to them. In fact, I had been trading using all the things we had been taught, and it wasn't working for me. So why would I need to hold on to them? Why was I carrying these things that really showed no levels of consistency and weren't giving me the type of results I wanted? I'm sure many of you have experienced this, or maybe are experiencing this right now. So really, successful and consistent trading is not about adding more and more things to your trading plan. It's about stripping them away. It's about releasing them and letting them go, making your trading as simple as possible. For example, think of traders, webinars you've gone to in the past, or books you've bought, or big strategies or systems you've spent thousands of dollars for. Most of them are extremely, extremely difficult to understand and very, very complicated, right? Most traders who've been trading anywhere from 5 to 10 years, a relatively short time, have extremely complicated trading plans. But it's the traders who've been trading for 20, 30, 40 years who have the simplest of plans. And that's why they're continuing to trade. They have this longevity because it's the simple things that work. So that's what we're going to teach you today. I'm going to present you with 2 rules today that you can apply to any method, any strategy. It doesn't matter what you're trading. I don't care what it's based off, but I really strongly feel if you add these extremely simple rules, you will increase your odds for consistency. And I'll show you a bunch of examples that happened just the last week, some that happened just a few hours ago, okay? Okay, here's what they said. They said, Steve, there are only 2 rules you need to be a consistent trader. Now, these are the rules I'm going to be sharing with you. And once again, you're going to be so surprised at how simple they are. Here's rule number 1. If you get a buy signal, I don't care if it's based on economic news. I don't care if it's based on indicators. I don't care if it's based on the full moon. But if you get a buy signal, that can only be entered above the 50-period moving average. Okay, you must be above the 50-period moving average. And conversely, if your strategy or system generates a sell signal, it can only be entered below the 50-period simple moving average. So why is this so important? Okay, well, let's look at this generic chart here. Most traders would look at this chart and say, well, Steve, there's absolutely no trend here. We're going down, then back up, then back down again. But if you add the 50-period moving average, you actually see there is some method to this, because you ask yourself, where is price in relation to that 50-period moving average? Price is above, right? So if price is above, then the overall trend is up. And we never want to fight the overall trend. So therefore, you can only enter buy signals once you are above, and price is above the 50. You never want to be selling above the 50. Now, conversely, if you get a sell signal, say your strategy is based off the earnings reports, okay? And you get a sell signal because you think the reports are negative, all right? Well, let's look at this chart right here. Most people would say, well, Steve, once again, this is just in a range. We're just kind of going sideways, up, and then back down again. But if you add the 50-period moving average and you ask yourself, before every trade, ask yourself, where is price in relation to that 50-period moving average? You'll see that the price bars are below. So what is the market? Not me, not some guy in a webinar, not some guy on TV, and not somebody in a chat room. What is the market, the source of what you're trading? What's it telling you? It's telling you that the overall trend is down. So you don't want to be buying if the overall trend is down. Now, does this work 100% of the time? No, nothing works 100% of the time. But you will have a higher level of consistency if you apply this simple rule. I've often told my students that if I were stranded on a desert island and I could only use one tool out of the countless tools I use and teach in my own trading, it would be this, because this has really helped me to be more consistent than anything else. Now, it doesn't matter if you're trading a 5-minute chart or a weekly bar chart. That's why we made sure that this was a generic bar, not to think that it only worked on a weekly bar time frame or a tick chart. Makes no difference. And it makes no difference what market. If you're trading currency pairs, if you're trading Bitcoin, or if you're trading stocks, it makes absolutely no difference. In fact, go back and research your last 10, 20 trades. I can almost guarantee you that the reason why you had some losses here and there was because you were out of sync with the simple rule, okay? Okay, so let's say your strategy generated a buy signal, and you look, you add the 50-period moving average, and you say, wow, okay, well, I'm above the 50, so Steve says I can go ahead and take it. Well, that's only rule number 1. This takes us to rule number 2. If we have a buy signal, and we are above the 50, now that signal bar, where all the rules came into play, where all the requirements were met, that signal bar must close in the top 25% of its range. And conversely, if we have a sell signal and we're below the 50, well, that signal bar must close in the lower 25% of its range. All right, so what does that mean? All right, so let's say we're tracking earnings, okay? We're above the 50-period moving average, and the earnings come out, and the bar closes like this, in the top 25% of its range. That is a great sign. That's giving you the confirmation to go ahead and take this trade. You have the 2 rules in place. You're above the 50, and you close in the top 25% of its range. And someone would say, well, why am I doing this? Well, hold on a second. Let's say you got a sell signal, and you're below the 50, and you close in the bottom 25% of your range. That's the green light to go ahead and buy the puts, I should say, short the market with the actual stock, sell the E-mini. It makes no difference, but that's giving you the green light. Now, why are we doing this? Why are we waiting? Why can't we just wait for the close of the bar or buy while the bar is still in effect and sell? Well, it's because of this. When a price bar closes either in the top or bottom 25% of its range, the market or the bar you're looking at is giving you a great clue as to which direction it wants to go on the short term. So in other words, with the 50-period moving average, you now are in sync with the overall trend. But when a bar closes on either the top or bottom 25% of its range, you now are in sync with the short-term trend. So now you have the best of both worlds. It's telling you what it wants to do. How many times have you gotten a buy signal, let's say with your strategy, and you buy at the market and it goes nowhere, right? Most likely that bar that you bought on closed at the bottom or not at the top 25% of its range. And conversely, going short. This rule, number 2, will add increased consistency to your trading. These 2 simple rules. So let's look at them on those generic charts again. Here we close in the top 25%. We're above the 50, and for all intents and purposes, we went up 5 or 6 bars. Now, for all you know, these are monthly bars, so that would have been a nice little rally there. Now, price comes down, and what do we have again here on the second bar? Another one that closes in the top 25%, and look what happened. You see the consistency in that, how the market tells you it wants to go higher? Works the same to the downside. We are below the 50. This bar closed in the bottom 25% of its range. And look what happened. Now, say you got a sell signal on this bar right here. Most likely you would have sold and watched the next 2 or 3 bars rise. And you would have said, boy, this is not working. I'm going to get out of this. I don't want to lose a lot more money. The minute you exited the trade, then you would have had this bar confirming. So this is why we wait for it to close in the bottom 25% as a confirmation that it's going in our direction. Now, go ahead and apply these 2 rules to your last 10 or 20 trades. Once again, I'm almost certain that they would have increased your odds for consistency tremendously. Just with these 2 simple rules. I incorporate this in everything I trade. In day trading, swing trading, makes no difference. These are incorporated in just about, I would say, 80 to 85% of all the strategies, all the techniques, all the rules that we teach at Specialist Trading. In fact, you just learned 2 of the 4 rules to one of our most consistent strategies, strategy number 4. In fact, this was the first strategy I was taught by my mentors on the floor some 4 decades ago. And these are the examples I'm going to be sharing with you today. Now, some of the highlights of this particular method, it's designed for traders looking to catch momentum. In fact, when I first started trading it on the floor, we would be in and out of trades in a matter of seconds, okay? That's how great this strategy was. But we've incorporated it now and be able to use it for stocks, for overnight positions, for futures, for currency pairs. So if you want to hold a position for weeks, months, even years, we'll show you ways how to do that in our courses. Now, it's a pattern recognition strategy. So it's based off a specific pattern that repeats over and over and over again in any market and in any time frame, okay? Now, it only uses 1 indicator. And guess what? You already know what that is. It's the 50-period moving average, rule number 1, okay? Rule number 2 is the top bottom 25%. Rule number 3 is the pattern recognition, and rule number 4 is the entry. Now, I can't share with you all of these things today. It wouldn't be fair to our students around the world who have purchased this strategy. But I will give you the first 2 rules. You've already got 50% of the rules. And if you've been trading for some while, you'll be able to come up with your own area for entry and stop placement and exiting as well. Now, remember, once again, we designed the PTS Primo charting platform to make trading simple, to make it easy. If you have a difficult time trading methods and strategies and you say, Steve, I just don't think that way. You know, I kind of a fly by the seat of my pants kind of trader. I don't have a lot of structure. That's okay. The platform auto-generates these strategy number 4 setups for you. Even though in our course, we want you to totally know what they're based off. This is not black box. We also want you to be able to check your work. So I'm going to share with you the process for learning how to trade strategy number 4 while using our platform, okay? So let's look at some recent strategy number 4 signals. We'll look at the full gamut of stocks, futures, currency pairs. Some of the setups will be able to be in and out within the day. Other setups you can hold for a day or 2 as long as you want. We teach you all these different ways in the course. So they all have different environments, different ways to trade them, okay? And remember, all these examples are going to be using our platform, showing you how simple it is to apply. All right, let's look at Apple on a 10-minute time frame. This was last week, August 12th, coming into the 13th. Now, someone normally looking at this with the way we're normally taught would say, well, you know, Steve, I follow the institutions. I took that $10,000 class on what the institutions do, and they're saying that there's some major resistance. They're all selling here. So I don't want to be a buyer of this because they're basically putting a lot of pressure on the market. So why would I want to buy when these guys who have tons of money are selling? Let me just give you a little bit of a experience when I was trading on the floor. I used to trade with the institutions, okay? They used to enter orders in my book for Waste Management, US Air, IBM. And let me tell you, excuse me, it's been my experience that they hold no higher level of consistency than anyone. In fact, they used to enter orders tons of times that were terrible orders. So I would no less follow them than I would someone who's been trading for a day or two. So if you're following the institutions, once again, these are faulty concepts that really don't show a lot of levels of consistency. What is it that we teach? We teach our students to follow the source. What is the source? That's the market you're trading. What is it telling you? Well, the first thing we want to do to find out what it's telling us is to apply the 50-period moving average. We call that our buy-sell line because it tells us whether we should be buying or whether we should be selling. So if you look on our platform here on the top green, the upper green strategy tab, this is where we have all our strategies, all of our different techniques. In the far left-hand corner, we have the buy-sell line. All you would do is the first thing before you even pull the trigger on any trade is to click on buy-sell line, and you'll see this drop-down menu appear, okay? When the drop-down menu appears, click on 50-period simple moving average, okay? Now we have 4 different ways. We're not going to go into them. They're a little bit more advanced and a little different, but let's just look at the simplest way, which is the 50-period moving average. And once we apply that, then we ask ourselves, where is price in relation to the 50-period moving average? Well, price is above, right? So the overall trend is up. So I don't care what the institutions are doing. I don't care if the earnings are supposed to be bad. I don't care if some guy in a webinar is telling you to sell this. The market, the only thing I'm following is telling me, well, sure, we may be going sideways now, but you should be looking at this from a buyer's point of view instead of a seller's point of view. Now, after taking our strategy number 4 course, you'll get an idea of how to identify these on your own. So just by looking at the remaining 2 rules, you could say to yourself, wow, I see a couple of setups here. So in order to check your work to see if you're learning properly, because I can't be sitting next to you 24/7, we created the special tool to look at that. Simply go on the strategy tab here, strategy number 4, click it on, and in the drop-down menu, click on signal arrows. This is going to be helping you to check your work. Once you click that on, you'll see if you're right. And in fact, there were actually 3 signals generated right here on this 10-minute chart. 1, 2, 3. Now, as the day came to an end, nothing much happened. So you could have either probably exited unchanged or with a small loss, or you could have held on to the position. That would have been the right thing to do because look what the stock did the next day. Went up 12 points. Now, someone would have said, well, yeah, Steve, was that because the institutions bailed out or they canceled their selling? I don't know. I mean, in fact, I don't care. The only thing I saw was that the market was telling me it wanted to go higher the day before. Now, the good news is if you miss that and you don't like to hold positions overnight, if the trend is strong enough, strategy number 4 will continue to generate signals all the way up. So as you see here, another signal was generated in the first hour or so. And you could have taken advantage of this trade for about 6 points, 6 quick points, okay? Let's look at another example. Here's a 15-minute chart of United Airlines, okay? Now we're looking at this. This is going back to last week as well. Now, someone looking at this will say, well, Steve, I took that, that course on technical indicators, and this is a classic scenario of divergence. We made a low here, and then we make a lower low, but it's not being confirmed by these special indicators that I spent $5,000 for. So look how we bounced. I want to get long this thing, right? All right, once again, I traded trying to use divergence for years. I could find no consistency with that method. What do I want to listen to? The market. What's the best way I can find out what the market wants to do? By adding the buy-sell line, the 50-period moving average. Click that on in the drop-down menu, click on 50-period simple moving average, and where is price? Price is below, okay? Now, granted, we have one bar here, one 15-minute bar closing above. Is that enough for us to tell us that the overall trend is up? No. Here's a rule of thumb. You need at least 2 or 3 closes above or below to tell you what the overall trend is. So one close above is not enough. And you'll see in just a few seconds. But let's say you, just looking at this one day here on the 13th, you thought you saw a strategy 4 sell signal. Well, to check your work, click on strategy 4. In the drop-down menu, click on signal arrow, and you were right. You would have had a nice little trade right there during the day. Now, As we went up here, are you expecting to see a buy signal? Not really, because look what happened the next bar. We closed lower and we closed in the bottom 25%, and look what happened. So you see the value of that, okay? The value of the 50-period simple moving average. Now right here, once again, we closed above, and someone will say, well, Steve, the overall trend is up. Well, sure, but there were no signals generated, and then we quickly went down back below. All right, let's look at a 30-minute chart of the QQQs. That's the ETF that represents the NASDAQ index, okay? A lot of students always say, well, Steve, what happens when the trend changes, okay? And what about consistency? You know, are all these trades profitable? No. Our approach is a 2 steps forward, 1 step back approach. The 1 step back means that we are aware we will have losses from time to time. That's okay. But what you want to have is a consistent method that's able to recoup those losses, sometimes on the very next setup. So as we see here, we had some really nice trades, but once the trend changed, well, what happened? Would we have lost everything? In fact, look at this buy signal here. That would have been a loss. Now, if you use one of our standard generic exits, you would have had a small loss here, maybe a point or two. But remember, it's all about being in sync with the market. And once price went below the 50, you just go with it. And you could have easily made back this loss on the next 3 trades. So this is what we mean by consistency. A technique that is aware that you will have losses from time to time. That's okay. But being able to recoup those losses, that's what you want to be able to have in any method, okay? We're not looking to hit home runs, even though those may happen from time to time. We're more concerned about longevity, about being able to sustain you to trade, not just have a couple of good months and then give it all back, but hopefully to have a couple of good years or maybe a couple of good decades. Let's look at the spiders, all right? Here's a 5-minute chart on the spiders on the 13th. I believe that was last week, a week ago today. Once again, once we crossed below the 50-period moving average, we look for bars that close in the bottom 25% and that meet the rest of the rules, okay? So here you have a couple of good setups. I believe 2 points each you could have made on those. All right, how about this? This is a 30-minute chart of the E-mini futures. This happened on the 10th of August last week as well. Someone looking at this would say, well, Steve, we're in a downtrend. And look, we're making lower highs and lower lows. I don't really want to touch this. I've always been taught that that's the definition of a downtrend. I'm not going to do anything until we break out of that. Well, remember, we're always talking about consistency. Where do you find the greatest amount of consistency? By listening to the market. So what's the market telling us? If we apply the 50-period moving average, it may be saying, sure, it's selling off, but it's selling off in an overall uptrend. So that's a buying opportunity. That's not something you should look at as you want to stay away from or short. That's a buying opportunity. So this whole time we were selling off on these 30-minute bars, we were still above the 50. And right here, we think we see a bar that closed in the top portion. It's above the 50. So we check our work. And yes, it was a buy signal. So you could have purchased this bar right here and 24 points on a 30 going into the next day. You could have taken advantage of potentially. Now, some of our students like to exit with a quick point or two. Others like to go 5 or 10 points. Others like to stay in as long as possible and say, I'm going to go for 30 points. Is one better than the other? Absolutely not. Remember, our job is not to tell you how to trade. Our job is to teach you all these different variables and then let you decide. So we have upwards of 7 different exit methods, upwards of 7 different entry methods, upwards of 6 or 7 different stop placements. You can choose mix and match, whichever you like, but ultimately you've got to be in charge of your own trading destiny. Our job as an educator is simply to teach you and mentor you along the way. Remember, it's our belief that the reason why most traders fail is because you're taking your cue, your decision from someone or something else. The entire industry is based on that format. If you go into a website, if you go into a chat room, if you're listening to the guys on TV, if you waiting for the earnings. If that works so well, why didn't it work for me 43 years ago? It's not about to change now. So trust in yourself, trust in the source, which is the market, and you'll get on that road to consistency. Now, guess what? If you missed that one signal, there was another one generated later on in the day. All right, let's look at another example of how the trend can change. Here's a 15-minute chart of GLD. That's the ETF for gold. Now, coming into the first week of August, a couple of weeks ago, gold or GLD was rallying like crazy. Have you taken the very first signal right here? Look at the potential you could have made had you held on to the trade. If you didn't want to, you could have exited each day and got back in the next day, okay? Now, what happened once the trend changed? Well, you simply reverse and go with the trend. Remember, our job is really simple as traders. Our job is to listen to the market, find out what it wants to do, and then jump on board. Our job is not to figure out what the earnings are. That's really not our job, and figure out what the stock's going to do based on that. Our job is not to go to a chat room and listen to some guy and have him trade for us. No, our job is listen to the market, and when it tells us it's changing directions, then we just change with it. It's really simple. It's the trader who makes it more difficult than it has to be. All right, here's an hour chart of Facebook. Now, this was a couple of weeks ago. Someone looking at this, a novice, would say, well, Steve, this is a range market. Look at this. We're in a range. We hit that top. We hit to the bottom. We hit the top again, back down. I was always taught you stay away from a range market. That's where you get whipsawed, right? So I'm not going to trade this. This is probably going to lose me a lot of money on a 1 hour chart in Facebook. Well, not necessarily. What is our philosophy? We don't care about these things that have shown no levels of consistency. All we want to do is listen to what the market's telling us. If we click on the buy-sell line and apply the 50-period moving average, we ask ourselves, where is price in relation to that 50-period moving average? We see that price is above. So even though we may be going sideways, the market is telling us that most likely it wants to go higher. All right, it's not predicting how high, it's not predicting when it'll happen. It's just giving us a great clue, though, that it wants to go higher. So this may be an opportunity to get long, provided we find all the structure in a strategy number 4 setup. So we teach you what to look for in our courses. And to check your work on your own, all you have to do with our platform is click on strategy 4, click on signal arrow, and you were right. There were 2 signals generated, okay? Now let's say you bought this one on the 5th or so, and you didn't want to hold it overnight, so you exited with a small loss, okay? Maybe you exited with a 2-point loss. Okay, it didn't work out. Well, the next day, the next hour, on the 6th, another signal was generated. So you could have gotten back in and potentially captured 30 points in the next day, okay? Now, do you think that 30 points would have made back that 2 or 3 point loss? Most likely. This is what we mean by consistent trading. You want a plan that's consistent, that's able to recoup those losses. And all of our trading strategies, all of our methods are extremely consistent. All right, here's a 10-minute chart of PSA. We're below the 50-period moving average, so the overall trend is down. Even though we had a nice little rally going on here, we're not going to get swept up in it. We're going to look for selling opportunity. Here's a bar that closed in the bottom 10. Here's another bar that closed in the bottom 25%, excuse me, I should say. You could have sold either one of these and potentially captured 5 points coming into the next day, all right? Amazon, here's an hourly chart of Amazon, the first week of August, okay? Now, we are above the 50 period and we have a total of 3 signals that were generated, but nothing really happened on each one of these days, okay? If you were lucky enough to hold on to the position though, you could have potentially gained 100 points coming into 2 days later. So if you wanted to exit these with a small loss, you could have gotten back into this one and made back what you originally lost and then some, okay? Remember, this is on an hourly chart of Amazon. You could have had the calls for all, that matters. It doesn't really, we never tell you what you have to buy or sell. This is not a stock-only strategy. It's not a futures-only strategy. It's not a option-only strategy. You can enter any way you like. Remember, it's your choice. You have to make that decision. Here is a 15-minute chart of the Australian dollar, British pound, okay, for all you currency pair traders, just to show you that this same technique, the same method can be applied to any market, any time frame. Right here at this point, a sell signal was generated. Now, if you didn't feel comfortable because it was generated on the first bar and you wanted to wait, you could have waited and then got back in, or you could have waited for the next signal right here. But this was on the 17th and 18th, and ultimately, look what happened. It finally kicked in. So sometimes you'll see that happen, not only with currency pairs, with stocks, with futures, that it takes a little while for the big move to kick in the way it did with Amazon as well, but you'll many times see that happen. So 40 pips in just one day, that could have resulted in roughly about $400 if you held it on that long. It was your choice. Now, remember that opening chart we shared with you in Tesla? That was a 5-minute chart where you said, you know what, I missed it. It was overbought and I didn't want to pay up that high for it. Well, what's the first thing we would have taught our students if they were thinking about trading a 5-minute chart of Tesla? First thing is to apply the 50-period moving average. And we know right back here that it was telling us on a 5-minute time frame that it wanted to go higher. So we didn't have to wait for anything to happen on the opening. We could have actually purchased it on this, because if we look, that was actually a buy signal on that last 5-minute bar. Now, if you didn't purchase on the 17th, you could have waited for the next first 5-minute time frame and purchased right here, all right? And potentially captured 250 points in one day, okay? And if you missed that, there were other signals generated along the way. Each and every one of these buy signals is above the 50, and they all closed in the top 25% of their range. I know a lot of you are saying, but Steve, there's other bars that close in the top 25% of their range. Why aren't they buy signals? Because remember, strategy number 4 still has 2 rules left in it, and I can't divulge what those are. It wouldn't be fair. They have to meet the specific requirements of a pattern that generates over and over again. Now, lastly, here's a 1-minute chart of the E-mini futures on the 18th. Okay, this was Tuesday, a couple of days ago. Here's what most traders do. They'll look at this and say, gosh, you know, I missed this. This was a big move to the downside. I wanted to short the E-mini, but I walked away for a minute, or I was too scared. And I didn't know it was going to fall out of bed this fast. This is a 1-minute time frame. Well, what's the first thing we teach our students? You always apply the 50-period moving average. So you would have known well in advance that this was below the 50, and that you should only be looking this to short. So you would have known that you have to get ready to short this. And if you applied the structure to strategy number 4, you had not only one, but another signal generated. Had you taken the very first one, you could have potentially captured 15 points or $750 per contract on a 1-minute chart of the E-mini in roughly just about a half hour or so, okay? So this is how simple it is. We've shown you examples in futures. We've shown you examples in stocks. We've shown you examples in currency pairs. You'll also see this happen in commodities. You'll also see this happen in Bitcoin. We have Bitcoin traders trading this strategy. So this is, as we said, a great strategy. I use this on a daily basis in my own trading. And once again, it doesn't matter if you're day trading or swing trading or investing. You can still apply this method. So let's recap before we go into the question and answer portion. Remember, the first thing you want to do is apply the buy-sell line, the 50-period simple moving average. I really don't care what your strategy is based on anything, but you should have a 50-period simple moving average always plotted on your chart, regardless if it's a tick chart, regardless of if it's a weekly chart. It makes no difference. And you always ask yourself, whenever you get a signal, where is price in relation to that 50-period? If the signal is to sell, but it's below the 50-period, you know, what this indicator is suggesting is you shouldn't take that, because you will be out of sync with consistency. I just shared with you numerous examples of how well it works when you're in sync with it. Now, if you want to take it to the next level, apply rule number 2, which is the top bottom 25% rule. That means even when your strategy has generated a signal, even if it's in line with rule number 1, you have to wait for the bar to close to conclude. And if it's a buy signal, it should close in the top 25% of its range. If it's a sell signal and below the 50, you want to see it close in the bottom 25. Why? Because now you have the short term in sync with the overall trend, and that's a highly consistent, a very high probability setup, okay? Go back and research your last 10 or 20 trades. I can almost guarantee that you would have increased your odds for consistency if you would have applied these 2 rules. Now remember, these 2 rules make up half of one of our most consistent methods, something I've been trading for over 4 decades, strategy number 4, okay? It's probably one of our most popular strategies and methods. It's a pattern recognition method, and you can apply it to any market, any time frame, and any direction. Lastly, you need the PTS Primo charting platform. This is what's going to help you learn even quicker, even with a lot more ease, because it's like having your own personal mentor right there sitting with you all the time, because you can check your work. You can study on our online courses what to look for, and then you can check and see if you're getting to that point where you can automatically tell where a setup is. My goal is to have all of my students not have to rely on the automatic up and down arrows anymore. We want you to be able to eventually use that as a learning tool so that you can ultimately say, well, that's a strategy for a sell signal. That's a strategy for buy signal on your own. That's where I want to get you to so that you can trade, make your own trading decisions. So as we get ready to close up here, ask yourself, and ask yourself honestly, do you think these trading rules can help your day trading for the remainder of 2020? I mean, think of it. We only have roughly a little over 4 months left. Most likely you haven't got the type of results you've been looking for at the beginning of the year. Close out the year strong. We have a great, great offer for all the attendees today. And this is going to be our great bonus here. We're going to be offering you strategy number 4. Now, pay no attention to that graphic, because when we first started promoting strategy number 4, we were promoting to stock traders, okay? That's who our market was. But over the years, we have seen through our students, and myself included, that it works as well as I just showed you in any market, in any time frame. So don't get discouraged or say, well, I guess this only works for stocks because I trade currency pairs. No, you've just seen me give you a bunch of examples where it works in any market, in any time frame. This is our most consistent strategy to date. You'll get all the instant course rules, detailed instruction, and you'll learn the remaining rules along with all of our different entries, exits, and stop placements. But we're not going to stop there. We're also going to throw in an entirely different strategy based off entirely different rules, entirely different format. This is strategy 3A. It's our premier continuation strategy. Now, strategy number 4 was a pattern recognition strategy. This is a continuation method. Let me share with you some of the highlights of this particular method. It's designed for traders looking to trade strong trending markets. Like, how many times have you seen a really strong trending either market intraday, or maybe looking at daily bars, and you say to yourself, well, I can't get in now. It's got to top out or bottom out, sooner or later. It's too late. Well, this is designed to see if there's still some more room left in the upside or to the downside. Therefore, it's a trend continuation strategy. And the way it discerns and calculates the buy and sell signals is by using a proprietary Bollinger Band set. And we teach you all of these in the course. Once again, you'll get all the rules, you'll learn all the entries, all the exit points. But let me just share with you a couple of examples. Here's a 10-minute chart of BIIB. This happened just last week or so. Someone looking at this 10-minute chart would say, gosh, I missed this. I wanted to short it, but it's too late now, right? Well, here's the beauty of strategy 3A. It would have generated a signal right there. And had you held on for the remainder of the day, you potentially could have captured intraday 6 more points. Now remember, this is not a strategy 4 signal. In fact, strategy 4 didn't even generate a signal here. This is an entirely different method based on entirely different parameters. Here's another example in the 10-minute chart of the E-mini futures, all right? This happened on the 11th last week. Once again, we have a nice uptrend right here. Most traders would say, gosh, look at that big bar. I can't buy it there. I wanted to go long, but I'll wait for it to come back down a little bit. But strategy 3A said, no, this is just the beginning. You better get in now. Generated a buy signal, and in the next day, the stock went up, or I should say the E-mini went up 32 points. Had you held it just for the next day, that's $1,600 potentially you could have captured if you decided to hold on long enough. Remember, some of our students get in and out with a quick point or two. Others like to go for 5 or 6. Still others like to go on for 30 or 40. You're in charge. We give you all the rules to all these 2 strategies, and based on entirely different parameters. So you have 2 different ways to trade. We're going to throw in strategy 3A. But we're not going to stop there. We're also throwing in some extra bonuses, okay? These are our 7 day trading bonuses. Bonus number 1, you're going to get the add-ons for strategy 4 and 3A. That means the automatic up and down arrows to learn how to trade for all these different platforms: TradeStation, Metastock, MT4, Sierra Charts, NinjaTrader, to name a few. Bonus number 2, you'll get our full Secrets of a Stock Exchange Specialist 3-hour video course. Years ago, I was asked to be the head speaker at a conference in Denver, Colorado. I spoke for about 3 hours where I gave a lot more different edges and techniques. We videotaped it, and this is what this is. It's a video seminar. Bonus number 3, you're going to get the PDF version of my book. That's where I go into detail and give a trade-by-trade account of how I was trading on the floor during the crash of 1987. Believe it or not, I was making markets on the floor of the crash years ago, and this gives a detailed account of what it was like to be on the floor then. You'll get that PDF version. Bonus number 4, Secrets 2.0 course. This is a course where it takes it up to the next notch, the next level. You increase your odds for consistency by learning more advanced techniques in this course. Bonus number 5, you're going to get 6 months of our PTS charts platform for free, okay? This is coming. This is a great, great offer. I'll get back to this, but let me go on to bonus number 6. Along with that, you'll get our strategy scanners on the platform to identify the signal strategies setups. And bonus number 7, you'll get our multi-scanners. You can scan for multiple things, such as the buy-sell line. You can scan for a strategy. You can scan for a lot of other detailed things. That's our multi-scanner. Now, let me get back to bonus number 5, because I think this is worth its weight in gold. Now, normally 6 months of the platform would run you close to $900. We're discounting that tremendously. Now, we're not going to just give you a couple of things on there. We're going to give you tons and tons of information, things that have taken me some 4 decades to accumulate. right there at your fingertips. For example, you'll get strategy 4 and 3A one click away. You won't find this anywhere else. Remember, all the examples I shared with you are exactly the way you'll be able to use it on the platform. You'll get the 4 different features for determining the buy-sell line. I just shared with you the 50-period moving average, but there are some more advanced ways to view the 50-period moving average line. You'll get our proprietary exit levels. This is just one of our methods that has our exit levels right there, one click away on the platform for you. Our strength of trend tool, I devised this with Pro Trader Strategies, that has an uncanny ability to find out if there's more room left in a strong trend or not. And then lastly, this comes with great personalized tech support. But let me share with you, I think, the most important thing here, the signal scanner, okay? Let's say you had our platform. Let's say I had done this presentation last week and you became a member of this course and you used our scanner to scan for signals this morning. Well, you could have scanned a 1-minute bar in the E-mini futures, and you would have seen that roughly this morning, about 7:01 or 7:02 this morning Pacific time, a buy signal was generated. After all, we're above the 50, and we closed in the top 25%, and it met all the rules of strategy number 4. So you had the option to take that signal, but it would have been a good idea if you did, because in 15 minutes you could have captured 6 points, or roughly about $300 per contract. All right, that's a nice little trade you could have made in 15 minutes, $300. What if you had 10? That's $3,000. Okay. This is just to show you that, we're not just, showing you things that worked maybe 2 years ago. This is something that happened a couple of hours ago this morning that you could have taken advantage of. You could scan for using our platform, and you could learn exactly how to properly identify a strategy number 4 setup. So after all these things, strategy 4, strategy 3A, all the 7 bonuses, 6 months of our platform, you owe it to yourself to take advantage and take your trading to the next level. Take advantage of this great offer. Here's the great offer. Let's break it down for you, okay? You're going to get these 2 great strategies along with 6 months of our platform, along with those 7 extra bonuses. Now, our day trader discount, normally if you purchased all of this separately, it would cost you over $7,000, closer to $7,100. We're going to discount that tremendously, but for a limited time only, we're going to go down to $297. That's less than $300. You're going to save over $6,800. Remember, that comes with 6 months of the platform. Included with all of this, I didn't mention you're also going to get educational correspondence. All of our students, our new students, will get my personal email address. You can contact me whenever you'd like to ask me a question. Say you're having difficulty with one of the strategies, you're not sure exactly how to apply it, or maybe you want to see something on the platform, just email me and I will be there as soon as possible to answer any of your questions, okay? This is a great offer. $7,100 worth of information that's taken me decades to accumulate for less than $300, okay? Take advantage of this great, great offer. Here's how to do so. Contact my sister site, which is Pro Trader Strategies. You can call them at 310-598-6677 if you'd like to place your order over the phone. Or if you see that link at the very bottom, that's the link that will take you to the information and the sign-up page. If you want to copy and paste that link, you have to copy and paste that and put it on a separate browser because it's not a live link. But it'll take you, if you want to sign up online, you can do it that way. But this is a great offer once again. If you want to do it over the phone, they have trading consultants manning the phones right now. They would be more than happy to take your order, okay? I think we have just about 5 minutes left. I would be happy to answer any questions. I'm not sure if they're going to be read to me or if I should just read them myself. Let me just see here. Opening up the question and answer area. Yeah, I'm not really sure. David, if you want to read the questions or where they are coming from, I'm not really sure where to find them.
Yeah, I'm not seeing any questions yet.
I think I scared everyone by telling them to wait.
Yeah, someone said, very nice, best presenter so far. This guy knows how to trade. Sign me up. Awesome.
Oh, I see them now. Yes, they're in under the chat. Okay, great. Yeah, okay, I can do it now. Yeah, thank you so much for the kind words. Yes, I guess someone said we're all busy signing up. Okay, thank you. And remember, sometimes when I've given this presentation, I give it like once or twice a year. The phone lines can be really busy or swamped. So don't worry, they will honor the $297. If you can't get to them till later, they will honor that. But if you wait like a week or so, I'm sure they'll go back up to $7,100. So please take advantage of this in the next few days. Generally, what charting time frames do you prefer? Well, once again, I think I answered that at the very beginning of the presentation. I always tell my students the best charting time frame is the one that makes you feel the most comfortable. You should never rely on someone to tell you what the best time frame is, because that may be the best one for them. In fact, we have students that swear that the hourly time frame is the best. They get so many consistent signals on that. We have other students using the same strategy, the same method, that swear that the 5-minute charts are the best. Is one better than the other? Absolutely not. The one that makes you feel the most comfortable is the one you should be trading. That's why we really require all of our students to first paper trade once they become a student of ours, with a lot of different time frames, with a lot of different markets, to see which one makes them feel the most comfortable. And then that's the one you should be using, okay? So that's our standard answer. I'm not trying to be condescending or arrogant, but that's really our philosophy. We never want to tell anyone how to trade or what the best time frame or what the best market is. And that's why we think that most students fail, is because we've all been trained to do that. I know certainly I was. When my mentors taught me all these things, I said the same thing. I said, why don't you guys just tell me what you're buying and selling, and I'll just piggyback off what you're doing. And they said the same thing. They said, because it may not work for you. Maybe we like to trade only once a week. And you being a young kid, I was in my 20s at the time, they may say, you may want to trade once or twice every 5 minutes. And so regardless of how consistent our methods are, if it's not meeting your needs, you won't make money. So you have to find something that works for you, whether that's the time frame, the market, or the actual strategy, okay? I hope that makes sense. Let me see some more questions here. I don't want to miss them. And I thank you once again for signing up. And remember, that is a great offer. That is, all of these things, including the platform, have taken me roughly 43 years to accumulate. And I use them in my own personal trading. So 43 years, I've taken all of that hard work out for you. You don't have to spend the next 4 decades searching for things that really work. Now, I want to be the first one to tell you, and I think Michael, the last presenter, said it as well. And for traders who've been trading a long time, they all know this, that nothing works 100% of the time, but that's okay. We're not searching for something that never fails, because we know that doesn't exist. We are searching for consistency. And all of the methods we teach and everything we promote have high levels of consistency, okay? Someone's asking, Steve, why do you use a 50-period simple moving average rather than exponential? Does it make a difference? That's a great question. It doesn't really make a difference, but trust me, in my 40 years, I have experimented with different weighted moving averages, crossover, exponential, different time frames, Fibonacci moving averages. And over the 4 decades, 50-period simple moving average seems to work the best. Now remember, it is not a strategy. All the purpose of the 50-period moving average is just to tell you what side of the fence you should be on. Should you be looking at the market with a seller's bias or a buyer's bias? Now, once again, if you feel that you get a greater or a higher level of consistency using a 34-period exponential, then by all means, go ahead and use that. This is not a system where everyone has to trade the same. We want you, in fact, we encourage everyone to experiment. The main thing is, though, use it in its terms, which means that it should be telling you whether you should be looking to buy or looking to sell. Simply because something is above the 50 does not give you the right to go buy it at the market. It's not a trading strategy. It's only a signpost, okay? Now, I think I'm just about out of time. I don't want to take up the next speaker's time. So as we conclude, remember, that's the information in front of you. If you're having difficulty, I think they posted the link right here on the chat box. And if it's sometimes the site will crash, or sometimes it's difficult, just continue and they will honor that $297 price if you can't get through them until tomorrow. But don't sit on that, because I guarantee you sometime next week it'll be back up to $7,100. So this is a great offer. And once again, I will be there with you every step of the way. You'll have my personal email. You can contact me whenever you'd like, okay? So thank you so much. Thank you, David, for giving me the opportunity to speak. And I wish all of you the best of luck trading. Most especially, I look forward to all of you becoming students of mine, okay? Thank you so much. I'll see you next time.
Thank you, Steve. Great presentation.